Good morning and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Tuesday, April 7th, 2026, and we have a lot to cover today. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. Well, the dominant story continues to be the geopolitical tension surrounding Iran and Trump's deadline, which is creating significant volatility across multiple asset classes. Oil prices are climbing sharply as we approach tonight's deadline for the Hormuz situation, and this is having ripple effects throughout the market. Energy stocks are having a notable moment that could potentially last, according to analyst reports. On the corporate front, we're seeing some significant merger and acquisition activity with Bill Ackman's Pershing Square proposing a $64 billion takeover of Universal Music Group, which sent the stock higher in early trading. There's also interesting movement in the healthcare sector with Novo Nordisk's Wegovy pill launch, drawing a new wave of patients into weight loss treatment, and the Trump administration finalizing Medicare Advantage payment rates that came in better than feared, providing a boost to health insurers. The IMF chief is warning that all roads lead to higher prices and slower growth as the Iran situation impacts the global economy, which is reinforcing concerns about stagflation that we've been monitoring. We're also seeing some stress in the financial system with news of the Mauritian bank collapse linked to the Trafigura fraudster, and Brussels banking rules potentially impacting UK-EU relations, which has City figures concerned about the regulatory reset.
That's quite a complex picture with multiple cross-currents. How are you reading the market's interpretation of these developments, particularly with the Iran deadline approaching?
Markets are showing clear signs of defensive positioning ahead of tonight's deadline. The fact that oil is climbing while broader equity futures remain relatively unchanged tells us that traders are hedging their bets and waiting to see how this plays out. Energy stocks are the obvious beneficiary here, and if tensions escalate further or the deadline passes without resolution, we could see continued strength in that sector. However, one strategist I read this morning made an important point that the market, the Fed, and the economy appear to be ignoring war risks to some degree, which could mean we're underpricing potential downside scenarios. On the opportunity side, Goldman Sachs is calling this a generational buying opportunity for US tech stocks, suggesting that the recent pullback has created attractive entry points for long-term investors. The key for traders right now is sector rotation, focusing on areas that benefit from higher oil prices while being cautious about consumer discretionary and companies with significant exposure to higher input costs. The housing market is already feeling the impact, according to real estate agents, so we need to watch consumer-facing sectors carefully. I'd also note that institutional money continues to flow selectively, with companies like Strategy adding another $330 million in Bitcoin despite paper losses, which shows conviction in certain alternative assets, even amid macro uncertainty.
That selectivity is definitely going to be important in this environment. Steve, let's turn to the economic calendar. What are we looking at for data releases?
Thanks, Robert. Today we have one key release to focus on, which is durable goods orders for the manufacturing sector. This indicator tracks new orders for manufactured durable goods and has a medium to high volatility impact on markets. Looking at the recent history for context, we saw some interesting movements earlier this year. Back on February 18th, the actual reading came in at 1.4%, which missed the forecast of 2% and was down significantly from the previous reading of 5.4%. Then on January 26th, we had a strong reading of 5.3% that beat the forecast of 3.7% and was up from 2.1%. In December, we saw 2.2% actual versus a forecast of 1.5% and a previous reading of 0.7%. So we've had some volatility in this series, and today's release will give us a fresh read on manufacturing demand and business investment trends. Now looking ahead to the rest of the week, we have several important releases coming up. Thursday, April 9th, we're getting the GDP reading with a forecast of 0.7% compared to the previous reading of 4.4%, which would represent a significant slowdown in economic growth. We're also expecting the Personal Consumption Expenditures Price Index tomorrow with a forecast of 0.4%, matching the previous reading of 0.4%. Initial jobless claims are due out tomorrow as well, with a forecast of 209,000 compared to the previous reading of 202,000. Then on Friday, April 10th, we have three significant releases. The Consumer Price Index forecast is 330.43, up from the previous reading of 326.79, which would indicate continued inflationary pressure. The Consumer Confidence Index is expected at 52 versus the previous reading of 53.3, showing some deterioration in sentiment, and the University of Michigan Consumer Sentiment is also forecast at 52 compared to the previous 53.3. We're also getting factory orders on Friday. This is a packed week for economic data that will give us a comprehensive view of growth, inflation, and consumer health heading into the second quarter.
Those are some critical numbers coming up, especially with the inflation data on Friday. Lizzie, let's shift to crypto. What are you seeing in digital asset markets?
The crypto market is showing interesting dynamics right now, particularly around institutional versus retail behavior. Bitcoin is trading in a consolidation range between $68,000 and $70,000, with sentiment that I'd characterize as neutral to slightly bullish. The positive developments include Bitcoin ETF inflows hitting $471 million, which is the highest level since late February, and signals continued institutional demand despite the macro uncertainty. Strategy just added another 4,871 Bitcoin for $330 million, bringing their total holdings to nearly 767,000 BTC, even though they're sitting on 14.5 billion in unrealized losses for Q1. That kind of conviction buying is absorbing nearly 3 times the new Bitcoin supply coming into the market. However, there are some concerns worth noting. Bitcoin's quantum computing vulnerabilities are being discussed more seriously, with some experts warning that a rushed quantum fix could backfire. We're also seeing whale activity with over $20 million worth of BTC moved to Binance, which typically suggests potential selling pressure. The Iran situation is creating volatility, with Bitcoin initially rallying on ceasefire talk reports, but then pulling back as those hopes faded. Some analysts are pointing out that Bitcoin is pulling away from software stocks as the Iran war and AI developments reshape market dynamics. For Ethereum, the picture is more bullish. Bitmain's treasury hit 4.8 million ETH as they accelerate their accumulation strategy, with their largest weekly purchase of 71,252 ETH since December. This institutional buying is providing strong support for Ethereum's price action. Solana is showing neutral to slightly bullish sentiment, with the Solana Foundation launching their Stride program to strengthen DeFi security after continued attacks in the ecosystem. This is an important development for building confidence in Solana's DeFi infrastructure. The key factors to watch for next week are whether institutional inflows continue at this pace, how the Iran situation resolves and impacts risk assets broadly, and whether we see any progress on addressing Bitcoin's technical challenges around quantum computing. The options market is quietly pricing in a major downside move for Bitcoin, so traders should be aware of elevated volatility risk even as spot ETF flows remain positive.
Well, that wraps up today's Morning Bell. We've covered a lot of ground, from geopolitical tensions and their market impacts to the economic data ahead and crypto market dynamics. As always, remember to do your own research and consult with financial advisors before making investment decisions. If you found today's discussion valuable, please subscribe to the Morning Bell wherever you get your podcasts. I'm Robert, thanks to Lizzie and Steve, and we'll see you tomorrow.